Credit cards offers you a line of credit that can be used to make purchases, balance transfers and or cash advances and requiring that you pay back the loan amount in the future. When using a credit card, you will need to make at least the minimum payment every month by the due date on the balance. A credit card is a type of credit facility provided by banks that allow customers to borrow funds within a pre-approved credit limit. It enables customers to make purchase transaction on goods and services. A credit limit is the maximum amount you can charge on a revolving credit account amount, such as a credit card. As you use your card, the amount of each purchase is subtracted from your credit limit, and the number you left with known as your available credit. Key takeaways: credit card companies charge you interest unless you pay your balance in full each month. The interest on the most credit card is variable and will change from time to time. Some cards have multiple interest rates, such as one for purchase and another for cash advances. And this is not good much. An ATM card is been best card used to transfer in ATMs only, while a debit card on the each other hand in a much more multifunctional card. They are accepted for transacting at a lot of places like stores, restaurants, online in addition to ATM. When you use a debit card, the funds for the amount of your purchase are taken from your checking accounts in almost real time. When you use a credit card, the amount will be charged to your line of credit, meaning you will pay the bill at a later date, which also gives you more time to pay. A debit card is credited for everyday purchases like gas, groceries, meals, clothing, and more. As long as you have enough money in your account, debit card is convenient and effective. Remember, using a debit card removes the money immediately, so there should be enough in the account to cover the expense.